Hey, what's up guys? This is Escape FX and welcome back to another YouTube video. So today it's gonna be a different kind of video. So I'll be explaining the free course and go through some of the points. And also after that, I'm gonna go through the two trades that I took yesterday. Two beautiful trades, and stay tuned till the end because I have a funny story about the second trade. All right. And before we start, I want to say thank you to each and every one of you who is showing me love on my Instagram, on my YouTube, and on my TikTok. You guys are amazing. And also a big shout out to everyone who is sending me some pictures of their trades based on the trap models that I am providing on the free course. You guys are learning so fast, so I'm very proud of you guys. All right. So now let's get right into the video. So before we start, I'm gonna let you read the disclaimer. So as you know already, I am not a financial advisor. So this YouTube video and this YouTube channel is for entertainment purposes only. All right. So yes, this is good. So I'll go through the numbers. Yeah. So I want to pinpoint something here. So the risk reward is a 1 to 5. So we'll be aiming for a 1 to 5 at least. But let's say that the trade offers you a 1 to 4. It doesn't mean that you cannot take it. All right. You can take it. Sometimes I take 1 to 4s. All right. Just to pinpoint some of the points here. The win rate is going to be above 20% for sure. The average per trade is approximately 1 to 3, but sometimes it's gonna be none. You won't be trading sometimes, and sometimes it will be 4. All right, so an average of 1 to 3. The pairs we'll be using is obviously the major pairs and also gold. The time frames we'll be using for the strategy is H1, 30 minutes, 15 minutes, and 5 minutes. The minute one is optional. You can be using the minute one, but I don't recommend it. All right. The stop loss for the gold is 10 to 20 pips stop loss, and obviously the take profit is going to be 50 to 100 if we are aiming for a 1 to 5. Also, we'll be using buy or sell stops or buy or sell limits. Guys, if you don't know what buy sell stops are or buy sell limits are, go see some free videos on YouTube and make some research and try to know what they are. All right, I'm not gonna explain what they are in this video. So here, just to mention that we Escape FX use a 1 to 2% risk reward. No, sorry, let me rephrase that. We use a 1 to 2 risk per trade. All right, but if you guys are doing a challenge, a prop firm challenge, you should use a 0.5 to 1% risk. All right, and also this is just a little example of you guys. You don't need to be winning 50% of the time. If you have a 20% win rate, all right, it's more than enough to be profitable. So here's a little example that if you take, let's say, in the month 85 trades, and you have on this 85 trades a 20% win rate with a 1% risk, all right, per trade, and you have a $1,000 account. Well, this is gonna be, you're gonna end up with a 17% profit. All right, so ending up with 17 wins and 68 losses, but at the end of the day you'll still be winning. All right, so focus on the money management, which is gonna be the most important thing in your trading journey. All right, so all right, and I just want to show you guys, this is for a 20% win rate, but if you upgrade to 25 to 30% win rate, it's going to be a 65%, all right, of profit, which is very, very good. All right, so all right, so yes, we'll be using market structure just to identify the traps and where to put our targets and our entries. All right, so I'm gonna let you go through this alone. Also, we'll go yes. So for the retail concepts, so you will need to know what are the retail concepts. You will need to know what are double bottoms, a bullish or bearish breakout, head and shoulders, break and retest, and a range breakout. The reason why is because you need to identify and know where are the stop losses. All right, because this is gonna be our targets. Good. Everything is gonna be explained in our trap models right here. So this is our trap models, guys. So I'm gonna let you go through it by yourself. Mitigation. Also, I'm gonna let you go through this by yourself. So the timing, all right, guys. So you can be trading anytime you want, but I prefer trading from 7 a.m. to 11 a.m. Yes, sometimes I take trades that are earlier, and sometimes I take trades that are after 11 a.m. But most of the time, in average, this is where the magic happens. All right. Also, there's the traps can be applied on any time. So sometimes you're gonna have a trap in Tokyo. Sometimes you're gonna have a traps in London. It depends. All right. Yes, this is important to know that the targets are more important than the entries. So for your as a beginner, you should focus more on the direction than on the entries. I know that you guys are seeing some snipers entries and you want to do the same, but start by the basics. Start at the beginning of the journey and start by knowing where is gonna be the direction first. All right, and after that you're gonna refine your entries and you'll find some very good entries. All right, but first you need to find the direction, which is the target. All right. Target entries. Yeah, this is good. I'm gonna let you go through it by yourself. I just want to pinpoint that the break-even levels most of the time are gonna be at the breakout push. If you don't know where the breakout push is, go at the structure and at the beginning of the PDF course. You'll see where is the breakout push. All right. And yeah, this is a beautiful breakout push right here. So this is the push that leads to the breakout. So here's is where we're gonna put ourselves break even. All right. So what I mean by break even is putting our stop loss to our entries. Market psychology. I'm gonna let you read through the market psychology. I don't want to spend too much time on the free course because I have a lot to cover on my 2 trades. All right. So this is good. Oh yeah, I want to go over the map. So the map is very important for you guys to understand that you need to find at the beginning at least 200 traps. All right, and you need to journal it. What I mean by that is, let's say yesterday I took 2 trades and this made me have 2 traps. All right, so I journal it, I say what I saw, and I put it in a folder or I put it on a document on my computer. All right, but you need at least to have 200 traps so you can refer yourself anytime and to refresh yourself. All right, so after you build the 200 traps, you need to be watching live price action. All right, so what I mean by that is you need to train your eyes. All right, guys, you need to be watching live price action to see how the candles moves. All right, and nothing like no mentorship can buy you this. All right, and this is probably the most important thing to do, is to watch price action. Even though you don't know where the market is gonna go, it doesn't matter. You need to be watching how the candles moves. All right, and sometimes you'll identify where they are manipulating and where they are trapping people. All right, and after that you can be using a demo account. So after that, open a demo account, try the traps, and once the demo is profitable. When I say profitable, it's not a 1 week profitable. When the demo is at least 4-6 months profitable, now you can try a real account. And for the real account, read what I wrote on my free PDF course, how to start it. All right. And here's the checklist. So when you have a trade, the question you need to ask yourself is what kind of trap it is. So based on the trap models that I provide on my PDF, you need to say which one it is. Is the trap obvious? If it's not obvious, don't take it. All right. It needs to be clear. All right. And also, is the timing aligned? So is it the prime time, so from 7 a.m. to 11 a.m. New York time, or is it not prime time? So do you see a clear target? So also, do you have a clear target in mind? Do you know where you're going to put your take profit? Is the target worth the risk? So is the risk reward good? If you have a 1 to 2 risk reward, probably you should skip the trade. You need to have at least 1 to 4, 1 to 5 risk reward. All right. And what is the entry model? All right. So I have 4 entry models. So you need to check out which one is the entry models. All right. So now let's go right into the trade that I took on the 23rd of August. So I think it's here. Yeah. All right. I'm just gonna go right here. Perfect. So now, sorry guys for my voice to be maybe my voice is weird. I'm kind of tired and it's getting late here, so at the time I'm making this video. All right. So guys, waking up at 5 a.m. So waking up. So this is not 5 a.m. yet. I think this is 5 a.m. All right. Yeah. So I wake up at 5 a.m. and what I saw was very simple. All right. Let me put this clear. So this is obviously a double top. And here is my support range. All right. So now I have identified one of the traps. All right. And here was the breakout. So now I have a trap. So I have identified a trap, all right? And also I have identified my target. So where is the support range? This is the support range. So obviously my target is going to be at the low of this support range, all right? So I'm going to put it right there. Perfect. So now what I need to do is find my entry, which is very simple. If you take entry model 1, you can be using this type of entry, targeting the low, which is a 1 to 4, which is enough. Or you could do like what I did, but this is a little bit more advanced. Like I say, don't focus on this. I took the 500 gap in between those two candles and I put my entry. This gave me a I think a 10 pip stop loss. All right, but let's say that we took entry model 1 for example. All right, so now you'll be triggered in the market. So obviously this is the breakout push, so this is gonna be the place where I'm gonna put myself break even. All right, so break even level. Perfect. So now we have the target, we have the entry, we have the trap. So I have a trap model 5 combined with an entry model 1. Is a trap obvious? Of course it is obvious. So now is it aligned with the timing? So this is the point where I need to say that this trade was not aligned with the timing, but this was a small trap before the big trap. The big trap was here, all right? So if you go on the, I think the 15-minute time frame, you'll see this is a big gap, and this is where I was looking to buy, all right? A lot of you guys I saw took this trade on the buy side, and it was a beautiful trade. It was perfect, all right? And I did not took this trade. I was not on my phone. I was not on my computer by the time this trade happened. But sometimes this will happen, and you need to deal with it, all right? But at least I took the two trades on the downside. So perfect. Now I'm waiting. So now I'm break even. So I put my stop loss to my entry point right here. And sometimes, well, not sometimes, but most of the times, when the market is taking out the breakout push, so this is the breakout push, the market will reverse. It will give you a small pullback, all right? A scary pullback, like we said. So now the market is reversing. So now people think that they should buy the market. And what I saw right here was another imbalance with another block. So I took this entry again with a 10 pip stop loss. But let's say you take it as with a 20 pip stop loss, all right? Let's say you keep your things safe. Here's the target, like here, perfect. So now we're waiting for the market to trigger our entry. So boom, now we're triggered in 2 entries. So obviously I'm gonna put myself break even for my second entry right here. So this is gonna be the break even place for my second entry. Break even level right here, all right? Good. Now I'm waiting. So now both trades are risk free, and I'm waiting for the market to smash my take profit right here. All right, so this is the take profit. So guys, the funny story about this one is that when I took the trade, all right, I put my take profit right here, all right, for the first trade. And my second one, okay, I was working out. I think I was doing my workout, and I forgot totally to put my take profit. And when I check my phone, all right, the take profit of this one was here. So in my head, both take profit were here, and the market will smash both take profit. So now, as you can see, the market reversed very fast. All right. So when I opened my phone and my alarm went in, I think the market was about here. So I knew that the market wouldn't go back down to my take profit. So I just closed this trade to a 1-to-1. I think 1% profit. But obviously it would have been a much more big profit because it was a 10 pip stop loss, and I think it was at 1-to-8. So, and this one was a 1-to-10. All right. So guys, this is the funny part, is that you need to always be checking your stuff. You need to be professional. This was unprofessional from my part, and you know, sometimes it's gonna happen, but you need to learn from it. All right. So now what I saw here is some people saw a support range. So when the market took out the support range right here, you could have put a buy limit, or you could have put a buy stop right here with a 20 pip stop loss. And obviously, guys, targeting the high. This was for real, this was a really beautiful trade. All right. If for sure, if I was looking at the market at the moment this happened, I would have been taking this buy trade for sure. All right. And this would have been the break-even level. I mean, break-even level, top, right here. And for sure, the target obviously is the new high. We're not greedy with our trade. So guys, so if you look at this, this is trap model 5, all right, 2 trap model 5, all right, and entry model 1, entry model 1. This is a little bit more advanced as an entry, but if you look at my course, you'll see that imbalance and not imbalance but gaps in the market are very strong, and you can put a limit, or you can take a trade based on this and target the support range. All right, so very powerful trades. All right, so guys, those are the 2 trades that I took. This was the one that some of you I saw on my Instagram. They took this trade. It was a beautiful trade, and yeah, so the the escape FX strategy is killing gold at the moment. All right, so guys, I hope you enjoyed the video, and I know this one's gonna be a long one. And guys, remember, the fee is very simple. I don't ask for anything, but please, if you like the video, if you enjoy, if you get value from my video, please tell a friend about it. Tell a friend about Escape FX. Tell them to follow us on Instagram, to subscribe on YouTube. And all right, so we'll see you in the next video, guys. Enjoy.